I'm sure you guys are very pleased to see this report. The take from the market, Brian, is that the Fed won't have to do as much tightening to fight inflation if we are really starting to see it come down. Do you agree with that?
Well, certainly this was a welcome piece of news, and it does represent progress. We saw that both on headline and core inflation, deceleration month over month. And when you look under the hood, particularly in core inflation, you saw some important areas like owner-occupied rent, which is an area that takes more time for price transition mechanism to start to move through. You saw some deceleration in inflation in that context as well. And for things that matter to American households, I think the deceleration in inflation in food at home, at the grocery store, is a welcome indication and consistent with what we have been hearing in retail and grocery channels of at least some softening over the course of the fall. So I think that is all positive sign. And at the same time, the rate of inflation is too high, and we're going to have to stay at this and stay focused on bringing prices down. I think that's what you heard from the president. That'll continue to be our principal focus in terms of the tools and the levers that we have here to keep making progress on bringing prices down.
As an economist, do you think we truly have seen the peak at this point? And I ask because we just got a reading from the Atlanta Fed GDP predictor showing that we're tracking 4% GDP, a potential acceleration here of the economy, which could bring up inflation again.
Well, look, I think that it is welcome that we're seeing some deceleration, certainly in absolute price declines in certain goods categories as well. And at the same time, we have to keep at this and stay focused on needing to see those price declines persist across time. And certainly there can be unexpected setbacks. There can be bumps in the road. And so we're going to, as we say, even in the months where we see more welcome data and also less welcome data, you never want to over-index too much on any individual 1 month of data. So we'll try to keep looking in the aggregate. But I do think that if you look across the economy, you are seeing some important signs of the resilience of the economic recovery in the labor market and in the broader economy, while we're also seeing some reduction in price pressures as well. That's the dynamic we want to see continue. It's the dynamic that the president has been talking about for some time now, this transition to more steady, stable growth. And so that's certainly what we want to see. And certainly this data gives us more confidence that that's what we will see going forward.
So it sounds like you're not willing to say we've peaked.
Yeah, I think I'm willing to say exactly what we're seeing, which is we are seeing moderation and deceleration in these numbers. And we're seeing it in some areas that I think are good indications of what may come as well. The future is uncertain. We face a complicated global environment. And so both the headline and the core, we're just going to stay focused on what we can control. The good news is that some of the things that we're seeing, for example, on healthcare, health insurance, on prescription drug prices, on energy prices, policies that we have already enacted are going to start to take effect and help to provide additional price reductions here in the next set of weeks and months. So that's positive as well.